Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting on the monthly time frame, what we can see is that all this area has been acting as very strong previous monthly support here, and again here, which once again acted as support at this level, and the market just started testing it here. Now, there is the possibility for a potential deeper test of this zone before we actually get a rejection to the upside, considering that if this is an impulse, and the correction just started, if we take our Fibonacci from the low to the high of this impulse, the 0.32 has not been reached yet. So there is the possibility for a deeper test of this monthly support at 0.32 before then getting a potential move higher. Dropping down on the weekly time frame, what do we have? From a weekly perspective, we can notice how the market has now broken structure. This green candle here was the previous support. With the last weekly candle, which broke below the area, this previous support now became resistance. And as we're testing it, there is the possibility to see a potential rejection to the downside away from this zone. Going down on the daily time frame, what do we see? Now, from a daily perspective, we can notice how this is previous daily support turn resistance here. As we're testing the zone, we could expect a potential rejection to the downside, completing this impulse correction and impulse pattern to the downside. Now, as we have an impulse and correction, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of this impulse. We can notice how we have a 50% and 0.618 Fibonacci retracements both lining up exactly at this area, which we could expect this market to potentially reject to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the euro, we have to first of all keep in mind that if we're checking the data for the euro, we are actually already checking EURUSD because all currencies on the spot are traded against the USD. So if we check the data for EURUSD, we can see how with the last reports, net positions have been decreased, going from 146k to 134k. This shows how institutions have started shifting their positioning to the negative side of EURUSD, meaning that we would have good probabilities for a potential rejection to the downside away from this area if we do get a deceleration at the zone to then reach the 0.32 weekly Fibonacci, and only at that point getting the rejection to the upside. This is definitely a possibility. So how we could be approaching this potential rejection to the downside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to the intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course. It's the most complete, all-inclusive mentorship program that I have ever created. Here you have an entire video presentation of exactly what you get, all the courses, services, softwares that you get in the all-inclusive mentorship program. In fact, You have the possibility to gain access to all my trading courses: risk management, day trading, swing trading, scalping, position trading. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface, the account funding program, in which we essentially give you a scholarship and cover the fees associated with taking a challenge at a prop firm. And if you continue scrolling down the website, you will see that you have the possibility to join and start a registration to becoming a student here at TransparentFX. So I really suggest that at least you go and check it out at transparentfxtrading.com. The link will also be in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.